Good morning. Welcome to the Milk Road Show, the daily crypto show where we bring crypto updates with the same energy as someone refusing to leave a casino at 4 a.m. I'm your host, Jay Hamilton. It's Friday, March the 14th, and all week we've been asking one question. Are we in a bull market or are we in a bear market? Now, as you can see throughout the week from the previous episodes, there's really no consensus right now. But one thing is very clear. Everyone believes that we are long-term bullish. 1 year from now, we will be higher than we are today. So when we step back and look at the bigger picture, what is really looming large over crypto is where is the adoption coming from? If we're going to get to where we want to go, we need to bring more users into crypto. And really, so far this cycle, we have not brought many new users. Sure, Trump meme coin brought a lot of new users, but they didn't really stick around. And let's be real, meme coins aren't the greatest onboarding ramp for crypto because a lot of people get wrecked and then they rage quit and they never come back because the trauma is real. So, how the heck are we going to get 1 billion people on chain? Well, that's what today's episode is all about, solving crypto's biggest problem, adoption. In order to take us through this, we have Santi Santos joining us, prominent investor, entrepreneur in tech and crypto. He's been in crypto since the early days, 2013, working for multiple large investment funds. Most recently, he launched Inversion, which is aiming to be like the on-chain version of Warren Buffett's Berkshire Hathaway. We'll talk all about that. Now, before we jump in, guys, if you're really struggling with where the market is at right now, you want to check out our pro report coming out this Saturday. It comes out tomorrow. If you're not a pro member, go pro, sign up, and you're going to want to read it because it really lays out exactly where we think the market is headed in the short term, the long term, and how you should allocate your capital and what tokens we are buying or selling right now, all in that report. So check that out. Today's episode is brought to you by Definitive Advanced trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, Santi, welcome to the
Th-
Milk Roadshow.
Thank you. Thanks for having me. Appreciate it.
Yeah, man, really good to have you. Second, you're back again. You were here a year ago, I
Mhm.
think, with Kyle hosting that time. So it's good to jam out with you. Okay, first question, same question we're asking everybody this week: are we in a bull market or a bear market?
Look, I'm not a market wizard. I don't pretend to time markets. I've never met someone that can systematically time markets. You know, that being said, there's a lot of things to be excited about. When you think about all the major roadblocks that have hindered the innovation, the adoption of crypto, all of them have gone away largely since November. There's one problem that we'll talk about of adoption.
Mhm.
The regulatory clarity, we have now, what is it, SAB 122, like where banks in custody at crypto assets. We have the first crypto summit that happened last Friday. We have a president that is very much pro crypto, and has tasked David Sachs, who was an early investor in crypto through a couple of funds, is a technologist at heart, spearheading the effort. And you have all the major SEC cases against most crypto companies dropped. Most importantly, we likely will have stablecoin regulation later this year, which I believe is the primary onboarding mechanism in a crypto. And so, am I bullish? Absolutely, I'm bullish. Now, the question is, we're not going to have anyone else to blame this cycle or any other cycle of why we haven't onboarded a billion users. So there's the fun starts now. There's a lot we need to do, but there's an open runway, and someone will capitalize on that. And honestly, I saw that last year, and I've been thinking about obsessing about this problem of why haven't we onboarded more users? Why
Mhm.
haven't we gotten more, 100x the demand for stablecoins? And there's some really good proof points. Like, you have high throughput blockchains. I couldn't tell you that 4 years ago. We have DePIN protocols that are, offering an essential service like mobile that doesn't feel and look like crypto.
Are you on
Crypto should be,
Helium? Do you use
yeah,
Helium?
Helium,
Yeah.
Uplink. There's a number, Andrina. Like, there's all these different protocols that have really like never led with this is a crypto product. It's just we're just going to offer you a product that pound for pound is really good. So to round it out, I do think that macro weighs on crypto, right? If I'm going to flip bearish, reasons why I'm cautious. Okay, well, you have traditional markets go down, and crypto's always been very correlated with traditional markets. It is a risk asset, so I'm long vol. I think markets will continue to be very choppy. You got to remember you have a new president. People are in wait and see mode. They're discounting a lot of what he says, rightfully so. That's even going into the election. That's just the nature of financial markets. But I think the first 100 days have always been, if you look at every major like transition period, you went from a very different administration to a new one. The market's just looking to wait and see. You have 100 days. I think the first 100 days really set the tone for whatever happens in the next 4 years. So you have all the different trades, wars and tariffs and geopolitical tension. And it's just a different, like, there's tectonic shifts like moving. So I think the market's just cautious, and we've had phenomenal 2.5 years of like Nvidia and the Magnificent Seven ripping. So, I think valuations are not cheap by any stretch of the imagination. We're 6% away from the Nasdaq being in bearish territory. That weighs on crypto for sure. I mean, I'm not here to tell you that crypto is an uncorrelated asset class. It never has, never likely will. And it's always the meme at the end of the cycle where people say it was just really all just one trade. And I tweeted about this, which is it's all just global M2, like global money supply. And crypto Bitcoin prices track that very closely, right? And so, not a perfect answer, but I will hopefully that offers some commentary as to how I'm thinking about it. I'm cautious in the near term for a number of reasons. Don't use leverage. Simple as
Yeah.
that. Never, because if vol will continue to persist, which I think it will, like if you're using leverage, it's a ticking time bomb.
Let's talk about the adoption problem that we have in crypto. What, why do we have an adoption problem? We have stablecoins. They're amazing. Why aren't they being adopted faster?
Excellent question. When you go to Vegas, do you take your life savings?
No, no, I don't, and I hope no one does.
So we shouldn't expect anyone to do that, right? And
Mm.
and so exchanges are, this is not a ding on exchanges. They serve a purpose. The problem is the type of user that shows up and registers for an exchange is very much in the mindset of speculating on a particular asset. They've heard someone in their network did well in crypto or the Trump presidential coin. They quickly register, create an account, and speculate. I don't have no problem with speculation. The problem is, why hasn't stablecoin demand increased dramatically? In the US, I get it. People don't feel the need because, it's like you always go talk to people about DeFi and they're like, listen, man, my Robinhood Venmo account works perfectly fine. I don't know what you're cooking or smoking, but just like relax for a minute. And I get it. But you go to other places like Mexico or Brazil or Argentina. Argentina is a kind of an outlier that it has a lot of demand for stablecoins, more so than other places. But Mexico, an example, it has one of the lowest penetration rates of crypto, like 50% of the population just touch crypto, which is, a lot. But I grew up in Mexico. The question is like, why isn't that 80%? Like people can't hold dollars in a bank account today. They could if they bought USCC and they could have access to yield in dollars. People want to save in dollars. And the simple reason is that the only mechanism to do so today is going through an exchange. And the local shopkeeper, it's a very difficult value proposition, right? And it's the activation of that user is not going to happen until we go about it in a different way. And exchanges will be important. They will continue to be a prime, serve a purpose, but that's not how we get 100 million users, 200 million, a billion users on chain. It's just not going to happen.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift. Okay, so riddle me this. How do we
Hmm.
get a billion users on chain.
Very simple, and this is the realization and the calling that I had last year. I'm an investor first. I've invested in over 250 companies, and looking at my portfolio, I asked the same question to companies that failed. I'm like, why did you fail? And they're like, ultimately, there weren't any users here. And and then as you know, I run a podcast called Empire, and I've been sitting on a chair trying to convince people and evangelize crypto. I don't want to sell you anything. I just want to evangelize the technology because everyone that comes into crypto at one point opens the door and sees the future. And I believe that every business will use crypto in some way, shape, or form. And crypto, like the best technology, should be invisible, but it's felt but invisible. And so it's a bit of like a couple of things clicking. The timing, I think, is correct. So how do we do it? Very simple. I buy a business where I think I can very much streamline that business by acquiring the business. So I don't have to convince management or the CEO that crypto is the best thing ever. I'll just take over his job. I'll pay him a pretty penny. I'll take over. Like this is private equity, right? You buy a business and then I'll run this transformation. And the transformation is really twofold. One is I've really obsessed since I left Parify 4 years ago. It's like, how can we take a traditional business and make it more efficient with crypto rails? And there's a couple of not every business right now. Over time, you could do it in many different types of industries, but right now there's a couple that I feel really excited about. The one is telecom. And the playbook is, you do something like Helium has done in the US in a similar way. You do it in a place like Mexico, and you acquire a business that has a very large user base. And once you become their mobile provider, you live with that customer 24/7. There is no better platform business to activate a user to come on chain. Why? Because at minimum, you take the business, a mobile service provider, you streamline that business on the back end by cutting costs with DePIN. And I don't want to go into that just yet because we're limited on time. And then after that, that user is constantly, topping up data because they're prepaid, right? You as a subscriber, your data plan, you never check it, right? Because you put your credit card, you're done. That's not the case in places like Mexico, where people are constantly buying in small increments data plans. That's more connectivity to upsell them to say, hey, convert your local currency on-ramp into what is called, you know, digital dollars. And that's how you get, the first 25 million users, the first acquisition we make. And then we go and do it again and again and again. And we become the largest mobile and fintech provider in Latin America, and then maybe the world. So like the core thesis that I have is, again, we're at a point where this technology is very robust,
Mhm.
meaning high throughput blockchains. We have enough proof points to run this transformation in businesses. All we need is to acquire a business and run this transformation and playbook. And that's how you do it, because you never lead with crypto. That user never understands that I'm using DePIN on the back end to make that service maybe even cheaper. But more importantly, they're using a service that is so essential that that user doesn't care if Bitcoin's at 100,000 or 30,000. They're still going to consume this service. And once they do that, I become their bank, because when money is digital, truly digital, your mobile provider will also be your bank.
Mhm.
Like there's no
Mm.
real reason why you shouldn't be able to do
Is
that.
that the everything app theory,
That's the
the
everything app.
WeChat, like
100%. Like, so I draw a
yeah.
lot of inspiration from a couple of companies. The one that I really have drawn a lot of inspiration from is Tencent. Tencent started as a social messaging application, WeChat, and then they've layered everything. Why? Because it's an attention game. Once you capture the attention of users, you should be doing more to upsell, to capture more attention. And I think there's no better, more compelling value proposition than your mobile provider becoming your bank. That's it.
So, if we've got a few questions here and a couple things to unpack. Let's talk first about DePIN for a second. If why is helium not bigger? This is what I can't
Yeah.
and I'm asking like
Oh,
myself this question.
oh,
You know what I mean?
100%.
Like
Well, Helium the network or Helium the mobile provider? Because there's two things, right? There's the
Mhm.
Helium, the network of hotspots.
I'm thinking the mobile provider, not the network.
Exactly. Why? Because it's a customer acquisition game. Everyone in crypto is trying to build distribution. It's hard, expensive, and time consuming. I
Mhm.
never want to build distribution. I want to acquire it at the best price possible.
Mm.
What does Helium have to do? Like every other mobile carrier, it has to say, UJ, hey, listen, I have this thing. My mobile plan is better than AT&T. Come here. I'll offer you an incentive. So you're paying a pretty penny to acquire that user. that user might not stick around. And so you have to be well capitalized. So, what are good examples of people that have done this well? Ryan Reynolds has a good brand name. He's an actor. He said, "Oh, I have a good brand. I can sell this." And he started selling what is it, Mint Mobile? He created his own, literally, mobile service provider that doesn't own any of the infrastructure. Why? Because he can acquire customers very cheaply. People love Ryan Reynolds. The celebrity playbook never fails.
Yep.
Coconut water, but for mobile, literally, or vitamin water. No, seriously, it's a customer acquisition game. And so,
Yeah, yeah.
again, I've done private equity before. I think I'm not Ryan Reynolds, but I can acquire a business of scale at a really interesting price. Because a lot of times people say, why don't you go buy like Robinhood or some fintech app? I'm like, fantastic businesses have a lot of users, really expensive. I don't want to. So price drives a lot of the analysis here because you can find remarkable businesses with large distributions. Yeah, go buy J.P. Morgan. You'll like cough up $1 trillion. But this particular business is so interesting because it is a challenging business. Mobile on a standalone basis is quite challenging. They have less than 10% EBITDA margins. They have high churn. The monetization of the user is not there. So I use that to my advantage because I can acquire a large platform business at a really compelling price, and then I'll run the transformation. I'll cut costs
Mhm.
50%. I'll upsell that user by becoming their bank.
Yeah,
And
the basics of the playbook make a ton of sense. It almost makes
I,
me like,
I,
why aren't
I don't want to
existing businesses
minimize.
doing that?
I don't want to minimize the. It is a Herculean task, and a lot of
Yeah,
people ask, "Hey, why hasn't no one done that? Like, why
yeah.
isn't no one doing this?" I'll tell you, it's already happening. The dirty secret of telecom is most cellular providers have a private network of hotspots in highly dense areas. So if you're in New York or Vancouver, or Montreal or Toronto, LA, they'll have hotspots that they own. And when you're there, you're consuming data, you're roaming the internet or whatever. They'll offload. What they offload is they're gonna have to find that spectrum from somewhere. If you're consuming a gigabyte while you're watching a YouTube video, they need to service you that.
Mhm.
They already have it. They have a network of hotspots that they privately own, and they don't tell you this, but that's how they save a lot of money. So when you're in a city like New York, they'll push you to use their network of hotspots. The only distinction between Helium and what these guys do is that Helium is open network and they have a private network. But the playbook of like running this at scale and like driving down costs for a business that is hard to operate is very well understood by telecom executives and companies.
Interesting.
Now, of course, I think when in my conversations with a lot of these deep in projects, even people like Coinbase, it's like, why is it that people are not using your Coinbase commerce product, or why is it that
Yeah.
people are not buying Helium? It's a pound for pound. It's a good mobile plan. It's hard to convince people to use your product. Not just in crypto land, just running. Look, sales and marketing, as you know, the best tech doesn't always win. We're at a point in this industry where the marginal difference between chain A and high throughput chain B is very marginal. The difference will be who can run the best BD muscle to take us to the promised land, which is onboarding a billion users. And I
Mhm.
think I can
And
do
it
and I think I can do a better job at doing that than anyone else in the space. And call me
Mhm.
crazy.
I mean, certainly, I won't call you crazy, not yet. We'll see. Well, I might call you crazy in the future, though. But I mean, it adds up a lot. The play makes a lot of sense to me. I think, where I see the deep inside. I see that it makes a lot of sense if you buy an existing, as you said, like, let's not have to go get customers. Let's just buy customers. And then
Mhm.
let's use crypto rails to reduce costs. Stablecoins make a lot of sense. I mean, let's be real. I think I don't even think you shouldn't even have to convince businesses to use stablecoins. Like, if you are sending money across
Mhm.
borders and you're not using stablecoins, you're crazy. What are you doing? Right? Like, it's so obvious now. But still, they're not all doing it. Okay, why do you say no?
The other point of this is why. It's like the Richard Feynman, like why? So if you look at like JP Morgan's like earnings reports, you know how much money sat in a checking account over the last like 5 years where we've had high interest rates, 4.5 years?
No, tell me how much. This
Like
is going to be a
hundreds of
disgusting
billions of
month.
dollars sat in a checking account earning 0% interest. JP Morgan clipped all of that yield and did not share it with them. And you're sitting there, you're like, why wouldn't someone that has a deposit at JP Morgan just click sweep to a money market account to earn 4.5%? Literally. And the simple reason is people don't like to think about finances. It's not taught in school. They don't have the sophistication. It's a nervous topic and they never care to look at it. And that, at a very from first principles, I never want to assume that I'm going to change a consumer behavior. Never. You lose your shirt if you think that. So assuming that a consumer is going to ditch his Visa card or American Express card to pay with stablecoins is totally unrealistic. It's tempting to believe that because, you can offer them some incentive and yeah, we're not there yet as an industry. But that's a simple reason, right? You're right. People should be using stablecoins for money transfers, but they don't. They still use Western Union because it's a household brand name. And
Mhm.
maybe they don't even know that they're being
So,
charged 4.5%.
so is what happens here then that Western Union and Robinhood and all these
Mhm.
platforms that do have the user base, and they're just going to start to use crypto rails, which are open source, and we just
Uh,
built this great open source rail for them that they get to
yes,
use, and they
they
win long term. Like, is that where this is all going?
again, my thesis is that every business will use crypto rails in one way, shape, or form to cut down costs. Now, the question is how much of that cost savings are they going to share back to the consumer?
Mm,
That's a more interesting question. If you look at the remittance rates that these operators charge, PayPal, Zoom, I think Zoom's owned by, you have TransferWise, Western Union, and a couple other players. So if you study like the percentage that they take, their take rate. So for every $100 that you send Mexico, US, or whatever, that percentage has come down and has come down as of late more so than historically. And a lot of the commentary from these analysts is like they talk about crypto. They talk about, hey, there's another solution. Slowly, but then all of a sudden consumers will start realizing this and they'll face that pressure. And so it will happen. These businesses should like when someone the other day asked me, it's like, why do you want to do inversions? Like I grew up in Mexico and I want to make sure the Western Union does not exist.
I love
Why?
that.
Why?
I
Because
freaking love
because
that.
because you know what I mean? Like it's unacceptable that when you send $100 or when you go to
Yeah,
the airport and they just shaft you with fees,
yeah,
unsuspecting people, hard work, hard-earned money. It shouldn't cost that. There's a better way to do that, and it costs zero. And the reality is, you know, I don't want to wait another 12 years for this to happen. We can do it today. And so you just wake up one day and said, "Fuck this, I wanna do it." And I'm not going to here sit in a chair try to convince someone. I'm going to buy their business, tell them to politely fuck off, and then run this playbook myself. And you know what? Why I'm doing it? Because I think hundreds and like quite literally a billion people will be able to realize a lot of this benefit. Now, how do I make money? I lower costs. Crypto is a technology that lowers costs fundamentally.
yeah.
DePIN
Like so
lowers
many
costs.
technologies do, right?
Bitcoin allows you to, lower the DeFi in a nutshell, lowers costs. Technology is just like technology, the arc of technology is always lowering costs.
Yeah,
And so, but again, the consumer is not sophisticated. The nice thing about crypto and stablecoins, it's like programmable money. And it's a term that I think is so powerful because money works for you. And like you program money with some logic where the consumer just sets certain preferences and money works for you. You don't need a wealth advisor. People have like robo advisors, I guess. But that's the beauty of stablecoin. A stablecoin is go back to the example of JP Morgan. What does a stablecoin do? A stablecoin by default earns you some yield. And by the way, new stablecoins with yield-bearing stablecoins have been approved now, as of I think it was Figure that got approved last week. Nonetheless, USDC will pay you 4% automatically. Then you
that's
sort of
amazing. That is so
single-handedly
amazing.
you
It's so
imagine
amazing.
if all of those deposits in JP Morgan were in stablecoins in USDC, how many of those probably hundred or millions of users that are depositing money in JP Morgan, all of them would have earned 4 to 5% over the last 5 years. You know how much economic impact that has?
It's huge.
Like, crazy.
Mhm. Yeah.
Like, so am I bullish crypto? You damn right I am. Like, it's an inevitable force. It's an inevitable train. You just need to open that small kind of opening for water to flow, and once water starts flowing, it's game over.
Okay,
And
so
that's the exciting thing here.
one of
That
the
no
one of the go ahead, sorry.
Well, the last point is like, you know what I mean? Like, if I do this well, what does success look like? I'll take a business that is quite inefficient and everything has a 10% EBITDA margin, and I'll take it to 20 or more. And everyone will be like, what did you do? Was it AI? No, it was like, it wasn't AI. I mean, I love AI. I think it's cool. I think it will drive some efficiencies, but I just did one thing and it's called crypto and it's called the settlement layer of the internet. And we've been telling you for the last 6 years, but I'm now showing it to you very visibly. There is unequivocally the email moment for this industry is when we tell people this is why it matters, and we're far, far more than a casino. But
Yeah,
people
and
are
we and
making a
we
lot of money on the casino, and that's fine. If you're an exchange, we're profiting off of that. If you're a chain, great. There's a lot of fees and MEV and all this crap. But we can do so much better.
yeah, 100%. Talk to me a bit about, okay, so we need the pipeline to open up. As you said, we are in a different place now than we were 4 years ago. You probably wouldn't have thought about inversion 4 years ago because we
Yeah.
weren't in a place where we had the tech, the block space to go and do this. So we're in that place now. We can go do this. A lot of people talk about the impact that Trump is going to have, that legislation is going to have. What is the impact of? So at the crypto summit, he said that he wants stablecoin legislation like in a few months. I feel like he set a ridiculous
I think it was
target, but
August, right? They're
is
gonna
it
be.
is it August? Okay,
Yeah, I think so. Yeah.
it's very
Bio.
quick. So what is going to be the impact of stablecoin legislation? That's the one thing I haven't yet wrapped my head around is what the impact is.
I think you're gonna have clarity for a lot of businesses to either use and probably issue their own stablecoins.
Mm.
Yield bearing stablecoins. Yeah, it's explosive. And then the second order effects of the rest of the world. And I think that paves the way for stablecoins just to be like, as the Collison brothers of Stripe that acquired Bridge said, it's like a room temperature semiconductor. It's like it allows businesses to like stop paying the payment processing fees and chargebacks. It's huge. Every business charges. If you're a small business or a business of any size, you're accepting credit cards. Out of every $100, you pay $2 to $4 on fees to this network that's, make sure that, the credit's there and you get paid in, not to mention you get paid in weeks. The
Yeah,
working capital impact of that, you can't buy inventory, you can't hire more people, you can't grow your business. That is a huge, huge, huge drag on the economy. So I think like concretely, stablecoin legislation really just paves the way for institutions, businesses to start using them, and then the institutions and businesses have large user bases, so they'll offer it to their users, and just money's digital. It should be digital, and stablecoins are that, but we haven't had the proper regulatory clarity to open up that kind of window. So there's a lot of businesses on the fence. I mean, I can tell you everyone's looking at Tether and their profitability. They're like the one of the most
crazy.
widely profitable companies, and they're looking at that and they're saying, "God, I want to understand how they're doing it." And I think there's a lot of interest from businesses to issue their own stablecoin.
Interesting. And you think it's holding I just don't see, and this is probably the seat that I'm in. I don't see who's being held back. That's what I don't see. Because Circle is doing it in America,
Yeah.
and you have JP Morgan apparently is doing it behind the scenes, right? And using stable coins for some of their transfers.
Hmm. Yeah.
So it feel Visa and MasterCard say that they're using it and starting to do it. So
Yeah.
is it a scale thing that like
Large
all of a
scale.
sudden it's a scale thing?
It's accelerating the adoption. You still probably can go into a traditional business and you talk about stablecoins and like, "They're what?" No, like, and so there's a lot that I think gets clarified. Um, the career risk of using stablecoins goes down quite dramatically. The uncertainty around them goes down for it's just a scale thing. Yeah, like you have some institutions that are using it for sure behind the scenes or whatever, but it's still quite small. They're like pilots. Visa is probably the organization that's done the most work with stablecoins because they either kind of adapt and reinvent their business or they
Was
go out of
yeah.
business because stablecoins and credit to them, they're probably one of the more kind of breaking that innovator's dilemma. Like they've been at the forefront of thinking about and MasterCard in some capacity too. and they're motivated, right? They can earn money in different other ways, right? But that payment processing fee that is high, that chargebacks, it's not that they necessarily like. This is what I call systemic friction. Like the financial system runs on antiquated databases and systems that don't really talk to each other very well. And we can't really out innovate our way within the current constraints of that system. And so someone like Stripe, who's constantly like doing APIs and like trying to facilitate, like lubricate these like old rusty gears, finally came to the realization and said, our next leg of growth is stablecoins. And then they went and bought Bridge for $1 billion, which is stablecoins APIs, allowing every business, like, any business that has an international workforce or contractors, like, will use a stablecoin to like get money faster to them. And you have companies like SpaceX and a number of others like using them. But you have to have like the orchestration layer like really, really easy and seamless for businesses. And I'll tell you, I think like this probably happens much faster than what most people realize. Like Stripe is powering a lot of businesses under the hood, and the Bridge acquisition is probably one of the most impactful things that will happen in crypto.
And no one even talks about it. Nobody
Here's the
talks
thing,
about it.
people are focused on the markets, and like Bitcoin's went from 100K to 80 or whatever it is now. I don't even check prices anymore. And people are freaking out. Like Bitcoin goes back to 85, 90. It's like, we're going to 250. Goes down to 70. It's like, we're going back to 20. It's like a weird psychology, like loss aversion kind of thing. But, this is if you're paying attention, it pays to pay attention. There's a lot of noise. There's a lot of, fear, uncertainty, whatever, fraud in the market. And it's always like this, where there's a lot of noise. But if you're paying attention under the hood, I sort of think that like this cycle is unique in that institutions are more excited than crypto natives, because crypto natives are jaded, they're cynical. I'm like, there's a difference between cynical and skeptical, and that is that a skeptical person asks question, a cynical person loses all kind of hope. And I mean, I just think institutions are chomping at the bit. They just want some clarity. There's so many people in these organizations that have been pounding the table to get into crypto, but upper management's still like, "Hey, I don't really know, Bob,
That's a
like,
scam.
that looks like a scam, feels like a scam,
Mhm.
just no, that all these hacks, and look, it's difficult. There's a lot of things that we need to fix in crypto. It's not perfect. Security is probably one of the most important things that we still need to figure out. But, there's a lot of smart people focused on that.
Mhm, mhm. Well, it's certainly there's never been a time where there's such a divergence between institutions and retail as there is right now in crypto. And the funny thing is, you would think it would go the opposite direction, right? Like
Yeah.
logically, if I was, a year ago, if I was sitting here saying we'd be where we are today from the institutional perspective and the government perspective and all this regulation, I would be like, oh yeah, retail will be so happy, everyone will be
Yeah.
pumped. But it's no, everybody's
That's just
and
such a
it's
great
tied to macro, as you said. Macro is
100%.
not a good place. So,
Yeah.
like, markets are
But
down because we're a
put
macro asset.
macro, by the way, you can't control macro. But like a year ago, 6 months ago, I said, hey, man, listen, what if I told you that all the regulatory hostility is going to go away, and that all of a sudden we might be in a position to design tokens for what they are, and innovate in that department, and we're also going to have more clarity on ETFs and potentially other assets being listed, and just stablecoin legislation, you would be max long bidding. And
For
there,
sure.
there's this
For
difference.
sure.
Now, of course, don't use leverage. Don't do anything that puts you out of the game. If you're already allocated, write it out. It's important to like, a lot of times we spend 80, 90% of the time thinking about the thesis. Is this coin correct? Is this asset correct? Not enough on structure, not enough on how you position that. And like, if you construct your portfolio in a way where you're like, listen, I'm going to ride this out. You sort of assume, you invert and you say, you're never going to get timing correct. But as you said, in the next 5 years, is crypto going to be higher? But barring any cataclysmic nuclear war kind of thing, I think so. We're going to be higher in 5 years and 10 years. This will be a greater than $10 trillion asset. It's a simple, best generational trade you can make.
The challenge is that it has become so speculative and so easy to launch tokens that we now have millions of tokens. I mean, people don't really like last cycle. What do we have? Like 10,000 tokens. Now we have
Yeah,
like
it's a
8
lot.
million tokens. like,
And no, it's such a good point, because you always have to think about what can derail that thesis. thinking in probabilities, you say, okay, and what version does crypto actually does not grow from here? And I think, look, Bitcoin is an interesting social experiment. It took gold centuries to ossify as a store of value. I think Bitcoin's pulled it off really remarkably, more so than, I don't find Bitcoin as interesting as other stuff. I think it's actually one of the least interesting things about crypto.
Really interesting.
Yeah, I don't hold any Bitcoin.
Because you're not here for the speculation,
No, I mean,
right?
listen, if you want to hedge macro, do it another way. Like Bitcoin is sort of like this like mechanism as an escape hatch from like modern monetary policy. But assuming that Bitcoin really works is assuming that the world is in like a very, very dire, like kind of like shit really hit the fan and Bitcoin went to a million. And that's like, in order to believe that, I just think that the world is in a
But
pretty
does
bad
but I
spot.
mean, like, gold hit 3,000 today,
Yeah, I don't
highest
know.
ever, new all-time high,
Bitcoin,
right?
Bitcoin
You
did
know,
it.
and Bitcoin, yeah, but it's not yet what it if it is fully accepted as a store of value and hedge against inflation as
That's
gold
my
is,
point. It
you
took
know,
gold centuries.
centuries.
Now, let's think, why is gold useful? It's a terrible semiconductor.
Oh,
It's
yeah, it's not
terrible
useful for
store of
anything.
value. Terrible store of value. Okay, Austrian economics would dictate 90 plus percent of all gold's been like mined that we know of. All of a sudden, price skyrockets. A new mine in Zambia gets discovered all of a sudden, or asteroid mining might be a thing, but it's not really like a useful asset. It's sort of like this hard asset that people ascribe some value to, but it doesn't have a lot of utility. I'm more excited about things that have you. I'm of the mind that utility drives value. And if you focus on delivering a lot of utility and you differentiate on that spectrum, you will create a lot of value. Is Bitcoin going to be, is it mutually exclusive with Bitcoin? Absolutely not. Bitcoin can like continue easily go up another, to 250 a million. It's a perfect meme in many ways. So I'm not here to tell you or argue otherwise. I just think it's like hard to evaluate. How do you value a commodity? It's purely based on supply and demand. Can you convince enough people and Michael Saylor do enough of a good job to convince people that Bitcoin is this perfect hard asset? It's fine. I just think that there's just so much more to this technology. Bitcoin is the first instantiation of what you could do with these decentralized and distributed networks that allow us to like trustless decentralized distributed networks that allow us to settle value on the internet. And it's an expansion pack of the internet. It doesn't replace, it doesn't blow up the world as we know it, but it does meaningfully transform it in the same way that the internet did, leveraging the infrastructure of the internet. So that transformation should happen faster. But we've been on the journey for the last 12 years to really transform and build. It's a hard problem. Like we haven't solved everything. Like, but there's a lot of really smart people that have built a lot of the tech. So you're right. 4 years ago, I couldn't have told you this, but now I'm very much of the mind that tech is not the main differentiation. And the tech is very much ready to get another 100, 200 million users on chain.
For sure, for sure. We got too much block space now.
Like the stable coin, like the okay, like the Trump launch coin over the weekend absorbed like 10 to 20% of all volume that you see in the Nasdaq.
That's crazy.
That's it. I mean, you're
We're
kind of
ready.
like
We're
you're
ready.
it's kind of surreal, but you're seeing a line of path to like tokenizing stocks. But like the stablecoin use case, like the Trump, there's a president launch a meme coin, and like the amount of interest that what you need to focus on any network, whether it's power grid to the internet to stream, whatever it is, you got to solve for peak demand, like low times, right? When everyone comes back home at 6 p.m., turns on the light. Or it's really cold and people turn on the heater. It's like those surges in spike in demand that breaks the network. So you have to like most of the time it's like kind of like very predictable demand, but when you have these spikes it just breaks, but you have to have the capacity to absorb that, and crypto just proved that unequivocally. Whether you putting meme coins aside, you just had a really interesting case study that that is possible. So I think that like when every chain says they have the highest TPS, I actually don't care. Like I think it's sufficient enough. Like stablecoins are not going to have that peak in demand, like as you saw in a presidential meme coin. There will be moments in time where that might happen, but we can create far more demand for block space to fill that block space by just increasing the demand for stablecoins. That there's some velocity to them, but a lot of it is just saving. It's not as like there's no peaks as you saw it with the meme coin of Trump.
Mhm.
So that's what gives me a lot of conviction that we actually can absorb and,
Yeah.
and onboard far more economic activity on chain.
And that happened on Solana.
Yeah.
I've gotta ask your
Mm.
What's your thesis on Solana?
Look, I mean, I flipped really bullish Solana. Historically, I was very much investing in Ethereum, and a lot of my portfolio was, investing in L2s and whatnot. But I think I built conviction in Solana when I just saw the amount of activity there, and I said, okay, this is where most of retail is coming. It's just a more streamlined, easy to use chain for users. And there's a couple of like really interesting technology, like Ethereum to Solana was 0 to 1. Parallelization, local fee markets, a lot of things that just really it's just a high throughput blockchain. And I think if you were to call Vitalik and say, "Hey, how would you build Ethereum from scratch today?" He would build it very much like Monad or you know Solana or Aptos Sui of say. And what I I find that really compelling. The amount of clusters of teams like DePIN and why? Because ultimately, if you bring the users, then all projects want to go where users are.
Mhm.
Whether you're a DePIN project, DEX, a perp protocol, and so of course, like developer activity is more like that flywheel gets going. Where I am now is I continue to be really encouraged by the activity I see in Solana. I think it has a very like the whole Phantom, Jupiter, like Radium apparatus is like it works, right? Where I am and where I come at it now is it's unsustainable to just like the amount of fees that have been driven purely on meme coin activity um, are quite high. And you want to diversify that stream over time. And so you can't really depend on, exchanges or the wallet providers. And it's really more of a how do you actually do this, right? Speculation is always going to be a thing. I don't have no problem with that. But I do think you hit a ceiling, right? There's only like most people lose money trading these things. It's like a very low EV to up to a point where it's negative EV. Like there's analysis of like pump investors and like lottery investors. So there's a limited audience that actually wants to do this. And to your point, it is a traumatic experience. You log in, you buy Trump at 75, it's at 16 3 days later. You're like, I never want to come back here again. But I do think that that's why that's the impetus for inversion, right? It's like we have to just acquire users, bring them on chain, and it's a user that you break. Crypto's always suffered from a self-referential aspect, which is it's all tied to the price of Bitcoin and then everything else. And it's all very self-referential. So how do you break that? You have to bring a different type of user that uses this technology without thinking that it's crypto. It's just to use it because it's just faster, better, cheaper. It's an improvement. It fits into their life other than I want to punt the
Gambling.
same way that I'm going to gamble on the weekend on the on the Green Bay Packers kind of thing.
Yeah. Totally.
The tech is there. It's just a go to market funnel onboarding mechanism that needs to be solved. And as simple as that may sound, it is not simple to pull it off. Like you just need a and so why hasn't anyone done this? I don't know. I'm intentionally building in the open. I hope more people do it.
Mhm.
We all win if we onboard another 100, 200 million users on chain. There's ways that I think are important then. How do you curate an experience? And this goes back to like you could have all these philosophical theoretical arguments of like, do you run it like Android or iPhone? How curated? I'm like, well, I think pretty opinionated and curated because most users like are just going to chase yield and we need to kind of curate. And for me, the way I'm building Inversion and the chain is very intentional around delivering the most amount of value to consumers and protecting and creating a curated, safe experience where all the products that I offer through the mobile phone and the service that they're consuming is very curated. And these are protocols are vetted. There's insurance. There's just things that just need to happen in crypto to really kind of compete against traditional solutions because decentralization on its own won't cut it.
Mhm.
It ain't it
If
philosophically it won't, and just
not enough
people
people care. Not enough
not
people
no
care.
one cares. No one
Yeah.
cares. We and so no, no, no. It's just I mean that's the reality of things. When
Yeah.
Uniswap
Yeah.
launched, and then you remember that time where PancakeSwap
Mhm.
launched and BSC Binance
Yes.
Smart Chain, it got like overnight more activity than Uniswap.
Yeah, everyone was on it.
It's
Yeah.
like then you had all the ivory tower academics saying, "Hey, it's a centralized chain." At that point, like, why even bother, right? It's just, and then you come to the unfortunately like very practical conclusion that like most people here are just here to try to make money, and they don't necessarily care until they learn the hard way that security is important. But again, I never want to change consumer behavior. I just assume that that's going to be the case. We just have to make it unequivocally, pound for pound, extremely easy to use these products that are invisible, like on the back end, powered by crypto, and never leading with a crypto philosophical take and argument. Part of why I'm doing Inversion is because I got tired of all the Christmas and Thanksgiving dinners and like, what do you do with crypto? It's like, oh, I don't believe in that. That's garbage. I'm like, if I do this, well, I'll solve a problem that I have, which is, hey, by the way, that mobile, you know that, open your phone. I'll tell them, what apps do you have? All right, these apps you have today, 5 or 6 out of the 10, all of them are using crypto. You don't know it.
Mhm.
I don't care that you know it, but I do. I feel it. You feel it. And that's
Yeah.
cool.
And that company is more profitable and
Yeah.
which is
And by
allowing
the
them
way,
to compete better, which
your
is
mobile
putting
plan
them
might be 20% cheaper. You
yeah,
might have the ability
users
to
are
go,
happy.
yeah, you
Yeah.
go back to down to Mexico and people are having dollars in their savings account. They're not inflated out by a currency that
Yeah.
doesn't, it's very volatile.
Yeah, yeah.
Like that's my focus. And if I help one user, great. If I help all of them, 20 billion people or whatever, not 20, but you know what I mean? Like,
Yeah, yeah,
that'll be
yeah.
great.
Yeah. Well, Santi, from myself and everybody listening at Milk Road, I really hope you achieve your goal. I am full supporter, my man. It is a ambitious. It is so interesting how it is such a simple playbook to explain very quickly. Like I get it right away, but then actually doing this is
Um,
going to. What do you think? What are your timelines? Like, what do you think is
the first
realistic
12
for?
months, 12 to 18 months, I want to buy a business or partner with a business to
Yeah.
do this transformation, prove to the world that crypto can materially streamline operations of a business very visibly.
Oh man, if
And
you
then,
do
and
that,
then, and then have 20, 50 million users in my chain, and I will become
yeah.
by then and there the largest chain. And once I do that, it's game on. It's like I'm not competing against any other chain. I'm competing against become the largest economy.
Damn.
You know what I mean?
And
Like you become bigger than Bitcoin if you pull this
yeah,
off.
well,
You bring imagine a world where every business runs on chain in some way, shape, or form. Every user uses a stablecoin, and you're basically the settlement layer of the internet. I think that that's bigger than Bitcoin
long term, yeah, for
long
sure.
term.
100%,
So I
100%.
don't
Right
have to
now,
do
it's hard to
this.
see, but
I don't have to
yes.
do this. I want to do this because I think that success here is everyone wins, not just my
Well,
chain, not just everyone wins. Because you best believe if you built a killer product, it will be routed to that. Interoperability is going to be a thing.
yes, yes, yeah,
And the
yeah.
user should never this chain loyalty is a we're going to look back and not say that we're just so painfully early. The user cares about value, and if they want to do something, I'll route it to whatever chain that particular application exists. Now, if they want to deploy in my chain, even better because it's EVM compatible. But otherwise, there are so many cool games, NFT collections, all this stuff that you could do, and that will only continue to expand. But it's time to onboard, and it's time to bring not a couple of 20, 30 active users on chain that are recursively leveraging and are fanatics. It's time to bring on, uh, 100, 200, 300 million.
Yeah, that are not here for speculation. They're here for the product that
That
they
the
use. They don't even know they're
my
using it,
north
and they're
my
not going
north
anywhere. They're just gonna continue to use it, right?
it's like my North Star is make crypto invisible.
Mm,
Most people can't draw a bicycle, don't know how the internet works, don't know how a plane works, but they use it. And you know what?
mm,
That's what we should just do.
mm. Yeah, and what I like about what you're doing is your speed. That's the key thing here,
Yeah,
because what you were doing,
momentum.
your playbook, like everybody's of 10 years from now, I don't know what the timeline is. Everybody's going to know your playbook. A lot of businesses are going to be running
Mm.
your playbook, but you're early and you're pushing really fast and really hard. So you have a head start over a lot of people. That sort of surprising because I literally sit here and say, why aren't more people doing this?
I feel a strong sense of urgency,
Do you? Yeah.
and just bear markets to really clarify and your thought and expose what is the problem that we have as an industry. I think it's a solvable problem, but I think we need to apply a lot of energy and focus to it. And I'm
Don't
here to
say
do
the
that.
word bear market. I don't utter that word.
Look, there are reasons why people become complacent. You can stare at a chart and say, "Why is number not going up?" Or you can do something about it. So we're
Yeah.
hiring a bunch of people. I'm looking to hire a best class team. That's the biggest risk here. I want to build a world class organization of the most stacked, private equity investors, consultants that really understand the industries we're going to go and transform. People that have experience, operating a chain. There's a whole component of that, right? So if you listen to this podcast and you feel compelled, you feel motivated, you want to jump out of your chair and say, "Fuck yeah, I want to do that." I want to build a forever company. Like there's some companies that I've invested in. You say there's a natural limitation to that company. It can only grow so much. It's servicing a particular country sector. There is no end in sight of running this playbook. If this works, the number of companies that we can buy, the type of companies and the type of transformations only grows as crypto breaks away into the mainstream. And you best believe we're going to be there trying to do that. And so there's no end in sight. I
Let's
want this
go.
company out. I want this company to outlive me. And I can, this is a forever company for A
Yeah.
plus talent.
Man, this is the exact episode that we needed this week. This is exact. We had such a bare week. Like the vibes were so low all week. And to finish the week with an episode like this that is so forward looking and so big picture and so exciting and reinvigorating as to why we're here and what we're going to do in the long term, man. Thank you.
If you ever need, look, I wasn't all, I started as an investor in this industry, and then I like to be close to founders. Every time I've been sort of demoralized, you see a lot of shit in crypto. When it's an open source system, it's like a new building gets built. Normally they cover it, and so you just see the end product. That's the traditional world. Crypto, it's like you see the plumbing, the scaffolding in real time. You're like, oh shit, this building looks like crap. And then one day you might wake up and be like, oh wow, like it's finished. And so there are times where I've been demoralized. And I think it is let's just face it, prices go down, it makes you question everything. You see hacks, you see, crime on chain, and it sucks. You get punched in the face. But every time that happens, I go and try to talk to founders. And honestly, they're just unfazed. They just are maybe like me, a little bit delusional and maniacal and obsessed about a particular problem, and they don't know how hard it's going to be, but they're just at it. And I think there's just something really comforting about that you apply yourself to solving a problem that I do think very much exists and also very much think is very solvable. And I don't want to wait another 12 goddamn years to see crypto really fit into the life of everyone. I think we have 4 years, and I want to do that.
Let's go. Let's go. Okay, everybody listening in, I'm going to put Santi's Twitter in the show notes. We're going to put Inversion's Twitter in the show notes. If you're not following him or Inversion, go follow them because you're going to want to see this ride. And it's just a pleasure to have you on the show today, my man. Really appreciate your time.
No, I appreciate it. Such a treat. Thank you for hosting me. And I know you got to go back to your wife because otherwise she's gonna.
Yeah, you got to go. You got to go.
She's gonna give you a hard
man.
time. She's gonna give you a hard time, and she's gonna kill me. So I don't want to do that. So I'll let you
it's
go,
okay.
Man.
I got my Harry Potter pen right here. My Hufflepuff pen. So
there you go.
Okay, let's wrap there, my man. Thanks for the time, everybody.
Magical. Yeah, I appreciate the invite.
If you're still here and listening, first of all, I love you. Thanks for giving us your time, and thanks for believing in us in this show. Also, I got to tell you guys about one of our partners over at NordVPN. I'm talking about online privacy. We talked a little bit in today's episode with Santi about the importance of security. Well, as you guys all know, when you're using the internet, especially if you're using the internet at a cafe or somewhere in public, using their Wi-Fi, you're vulnerable to data breaches. I use NordVPN as my VPN provider. Why? Honestly, kind of funny, also similar to this episode with Santi, it's just such a great product. It is so easy to use. If you need to use a VPN, I've used so many VPNs over the course of my life with all the travel I've done and nomading and everything like that. And NordVPN is just so easy to use. And tell you what, because we're a partner with them, you can get 72% off your first 6 months right now. So if you're looking for a great VPN provider, check out the link in the show notes. Get your 6 months at 72% off. Wow, what a deal. Incredible. And sign up for NordVPN today and stay safe out there, folks. Thanks again for listening in. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.